Hello and welcome everybody. Today I will show you one of the cleanest, simplest, and most effective ways to trade gold reversals using only the 4-hour time frame, support and resistance zones, and one single candlestick pattern. This strategy has a win rate of around 70% and an RR of 1 to 4. We have backtested it, forward tested it, have been trading it ourselves, and it is optimal for traders who don't have a lot of screen time and don't want to use a lot of indicators or tools. To understand the strategy effectively and use it correctly, we have to understand 4 main things. The first thing is supply and demand zones, then how to identify the zones correctly on your chart. Number 3 is how to actually identify a setup. And the last thing is finding an entry, targets, and stop loss. So grab a notebook and let's dive in. So the first thing is supply and demand zones. It's a very basic concept and it's very intuitive once you understand the theory behind it. So let's imagine we have price just moving like this. Okay, so this is a theoretical price chart. We can see that there are certain levels in which price tends to react more often. For example, here. So we see that price has reacted 3 times in this zone. Because it has corrected upwards, we call this a demand zone or a support zone. Why? Because the buyers are stronger than the sellers. So more people are interested in buying here than in selling. That's why the price bounces up on this zone again. Once we break this zone and price still reacts at that point, it turns from a demand zone to a supply zone. Why? Because price, every time it reaches this upper point, reacts, which means that sellers are now stronger than buyers, but in the exact same zone. You might have seen this also like price being trapped in between 2 zones. For example, like this. Price just bouncing up and down from 2 key support and resistance. So for example, this lower bottom here would be a support. And every time it bounces up from it and hits the roof, this one would be a resistance and so on and so forth. Once it breaks it, the support becomes a resistance and the trend continues. This is also what we try to identify with gold. So we try to find zones of interest. We also try to find signs of exhaustions, which means that the price moves slower towards the support or resistance level. And then we try to find our candle pattern, which is a bearish engulfing, for our confirmation. Once we find that bearish engulfing, we look for our entry and we place our trade with proper risk management. So as you can understand, we don't need 10 indicators. We don't need to overcomplicate things. We just need a clean structure and logic and just identify the zones correctly. There are a couple of things that we have to consider though. For example, when gold is going towards the zone, we want the trend to get weaker and to get slower. That's the first thing. The second thing is when it reaches the certain high of this trend movement, when it reaches the high of the impulse, we want it to give us a very strong bearish engulfing because that will be our sign that we can now look for entries. So let's talk about the candle patterns we're looking for. The most important thing is a bearish engulfing, but how does that engulfing actually look like? Let's imagine that we have our last bullish candle. So this would be a green candle. And then our bearish engulfing should be a completed candle, full and complete, which swallows this bullish candle. It can be taller, so it has to be at least this big. It can also be bigger. It's also not a problem, but it can't be even minimally smaller than the bullish candle because then our setup is not valid anymore. There is also another pattern, which is also a really good indication for a setup, which is called the evening star pattern. So in between these 2 candles is actually another candle, which has a really small body and really long wicks on both sides. So it doesn't really matter whether it's red or green. It's usually better if it's a red candle, a bearish candle, but the body is really small and the wicks are usually the same length up and down. So this candle is also what we call a doji. And this pattern is called an evening star pattern. What is very important is that this bearish engulfing still engulfs this previous bullish candle. We don't want it to be just engulfing this doji because then we don't have a valid candle pattern. We don't have a valid setup. So we do want to engulf both of these candles and maybe be even a little bit bigger. So enough painting, let's go to the actual gold chart. Okay, so this is the gold chart from a couple of weeks ago. And as you can see, I have already identified some zones. But to do it together, let's just make it a bit easier for us and turn the candles to just a line chart, because then it's much easier to identify the support and resistance zones. So as we can see, for example, here, we see that price has reacted a couple of times at the same zone, which is way easier to see with a line chart than with a normal candle chart. So this would be one of our resistance zones. Why? Because there is a bearish reaction at the zone, which means that the sellers are stronger than the buyers. Thus, this is a supply zone. What about our demand zone? You maybe see that the price reacted also here at approximately the same zone, but because we have a low, which is lower than that, and we're still in this kind of range, our actual support zone would be down here. And if we look a little bit further, we can see that price had also reacted at this zone in previous times. So a zone can stay relevant over a couple of weeks, not just within a day. Okay, so let's go back to our normal candle chart. So we're at the zone, we have a bearish engulfing, and it is a valid structure in which we look for setups. Now the question is, where do we actually put our entry and our stop loss and our take profit target? For this, we can use two approaches. The first approach is to use the Fib tool. So the Fib tool just shows us the levels of this candle. And we will take the Fib tool from the top of the body of the candle, right? So not the wicks, just the body. And then we will look for entries starting from the 0.618 level. So you can also just take the opening of this candle, which would be the upper side of the candle body, right? But the further high you get, the less probable it is that your setup is going to get activated. So you can take an 818 level, or you can take just the entry. But anything above the 618 gives you a very good entry. The higher you go, the higher your risk to reward will be. Okay, what we can see in this particular setup is that the next candle never actually went to our entry. So this setup we would have missed by the strategy. So we don't cry, we don't dwell on it, we just wait for the next setup to happen, which would have been 1 or 2 days later, I think. So the next candle didn't give us an entry, it went by without us. But it did have a trend move back to the zone of interest, right up here. So now we can see we again had bullish candles, and now here we had a doji. The next candle is a bearish engulfing. But if you remembered from earlier, this bearish engulfing isn't 100% optimal. Why is that? The answer is pretty simple. This bearish candle did not engulf this bullish candle. What does this mean? We can still take a setup, right? But the win rate could be slightly worse. So this is still a good pattern, but it is not an A+ setup. So let's just say hypothetically what we could have done. So here we have our evening star pattern, we have bearish engulfing. So we can either take the 0.818 fib level of this body of the candle as an entry, or we can just take the opening as an entry. So let me zoom in a little bit more. If we take the opening as an entry, our entry would have been here. Okay, where do we put our stop loss? The most optimal way, which works most of the time, is if we put this stop loss directly above the highest point of this bearish candle. So the highest point would be the top of the wick, right? So we would put our stop loss here. If you want to go safe and adjust for market volatility, you should go like $1 or $2 higher. So now we have our entry and we have our stop loss. Where is our target profit? So you can have two target profits. The first one would be at the very bottom of this engulfing. So I'm just going to circle our bearish engulfing again to know what I mean. So this is our bearish engulfing, the whole candle with body and wicks. Our first take profit would be at the bottom of this candle. In this scenario, we would have had a 1-to-2 risk to reward, which is not bad. As part of risk management, we often take partials, but this is not the only target that this strategy hits. So we can take the Fib tool again. And now instead of going just towards where the body is, we go up, down until the wick of this bearish engulfing. And then we go to the minus 0.27 level of this candle. And now we would have a second target down here, which would be almost a 3-to-1 risk to reward, depending on how big your stop loss is and how much you are trying to account for volatility. Okay, so this would have been one setup. Let's go to another setup in this exact zone. So where do we see another bearish engulfing? Engulfing a bullish candle, which is still in the zone. It is directly here where we actually took our trade and our profit. So if you can see, we have again a bullish candle, which wigged into the zone. So it is still in the resistance zone. The next candle is a beautiful bearish engulfing. Why is it beautiful? Because it completely swallows this bullish candle and is still in the zone. So we can see that it engulfs completely the candle. Now we look for an entry. The optimal entry is at the opening of this bearish candle. So let me get my position tool. So this is the opening, and we're just going to put our entry here. Where do we put the stop loss? Above the wick of this bearish candle. So the wick is around here. If you want to account for a bit of volatility, you put it $1 higher just to be safe. Okay, we can see that after 1, 2, 3, 4 candles, the setup actually came to be. So a very important thing with this strategy is that you're patient. Because of the fact that we are in the 4-hour time frame, the setups don't happen immediately, which is also good because you don't have to check the charts as often. Okay, so now we have our entry here. And we will take our take profit. Our take profit 1 would be to this level because this is where the bearish candle ends. So this would be a 1 to 3 risk to reward. If we go a little bit further and actually take the minus 0.27 of this candle. So the minus 0.27 level is here. So this would have given us a 4.5 risk to reward. So the strategy has a relatively high win rate of around 70%. It also has a very good risk to reward, usually 3, 4, 5 to 1. Two important factors are that you have to be really patient. You can't force a setup. If the engulfing is not clean, if we're not actually at a resistance or supply and demand zone, you cannot force a setup. You just have to wait. And that's the main catch with this strategy because it doesn't happen really often. There are phases in which it happens once every week, twice every week. There are phases where it happens once a month. In my opinion, it is optimal for people who don't want to spend a lot of time trading. Another thing to consider is the strategy is quite good, but it doesn't mean that losses don't happen. Okay, so to wrap it up, let's just write down the exact steps again. Number 1 was identify supply-demand zones. Number 2, look for a trend move ending in the zone. Number 3 was look for your engulfing candle. Number 4, put entry at engulfing opening. Put stop loss at the engulfing candle's highest point. Let me just write plus $1 or $2. Target at minus 0.27 fib level of the engulfing candle. Use same risk on all trades. Okay, and that's it on the gold reversal strategy. I hope that you understood how the strategy works and are already trying to learn it, backtest it, forward test it, whatever. And let me know what you thought of the strategy and whether it helped you or gave you a little bit of clarity on how to trade gold efficiently. Thank you all for watching.
Ola Prime, trade with transparency.